Jacob, welcome back to the channel, and in this video I want to talk to you guys about some of my thoughts surrounding the Snowflake and JFrog IPOs and whether or not you should consider investing in them for yourself. So I know I said this in the title, but I'll just kick it off with this again. I'm not personally partaking in either of these IPOs, at least initially, okay? I think these two are coming out of the gates way too hot. I think they're capitalizing, rightfully so, I don't blame them for this, but almost taking advantage of some of the mania and hype that we've seen in the tech sector to overprice their companies. So obviously those are my thoughts summarized right there. We're definitely going to go a little deeper than that. So as always, we'll go over each topic that we're going to be discussing, and then we'll dive into each one individually. In front of us, TradingView, the one chart that we're going to be looking at today, it's not Snowflake or JFrog. We don't have any charts to look at yet, but this is the NDXT. So this is the NASDAQ 100 tech ETF, all right? So this pretty much just tracks the tech sector in a single chart. So I'll let you guys know why this is important. We will take a look at this at the very end. We will then move on to look at both Snowflake and JFrog's websites. You guys know that when I make these analysis videos, I do like to do that. Obviously, it's not as fundamentally important as looking at financials or something, but the reality of this current market environment is that the fundamentals, the financials really don't matter that much. What matters is story and brand. I don't agree with that. I actually heavily disagree with with how that is the current market environment, but that's the reality. And that said, we will take a quick look at their websites. Again, not going to go super deep. You guys can do this for yourself. I do recommend before investing in any company, definitely long term, look at their website, look at how they brand themselves, look at how they present themselves, because again, in 2020, that's extremely important. So we'll take a quick look at both of these websites. JFrog's website is actually super sick. It's probably using a lot of data on my computer right now to look at, so might be a little laggy, but this thing is sick. This is a sick website, definitely better than Snowflake's as I was looking over the two. But again, we won't spend too much time there. What I do want to spend the majority of the time on is this Bloomberg article. Okay, so IPO busy season arrives as Snowflake JFrog boost listing plans. So this kind of goes along with what I was saying in the beginning. I think these guys are taking advantage of the rally that we've seen in tech, some of the mania surrounding the investors who are participating in this tech rally, and overpricing their shares. They just keep bumping them up. So we will touch on this. This woman, Crystal Say of Bloomberg, I believe that's how you pronounce it. I'm sorry if I pronounced that wrong. She did a great job with this. So shout out to her. Shout out to Bloomberg for this solid article that we will look over. We will then move on to Jim Cramer, Mr. Mad Money himself. Again, you guys, if you're familiar with Jim Cramer, I agree with many of the things he says. I disagree. I like the dude personally, but again, I think he has some great quotes here that I want to share with you guys and just kind of give you guys my take on his take. All right, so that's all the stuff we'll get into. As always, before we do dive in, though, I will ask you guys to please give the video a like if you do go on to gain value from it. Subscribe to the channel if you're new around here, and check out my complete portfolio and daily newsletter. First link in the description if you're interested. Again, I'm not trading either of these yet, but if you sign up for this, you will know if I ever do manage to take a trade, maybe on a pullback or something. But it's literally every single position, all call options, put options, stock positions in my entire portfolio. And I do send out a newsletter every trading day during market hours, talking about the trades I made that day, rationalizing my thoughts, as well as just giving you guys my thoughts on the markets overall. Okay, so more real-time updates from myself if you're interested. If not, no worries at all. That said, let's get into it. So again, we will touch on this at the end. This is the NASDAQ tech sector. I'll let you guys know why this is important. But first off, let's take a quick look at these. Okay, so once again, Snowflake, definitely a less impressive website than JFrog. We'll just scroll down a little bit here. So Snowflake, for those of you, both of these are kind of cloud, I would say they're somewhat cloud focused, which again, the cloud computing space is one of the hottest sectors in the market right now. Makes sense during a corona economy, a pandemic. Everyone's at home, everyone's using cloud storage, everyone's using the cloud for pretty much everything. It makes sense that these guys are capitalizing on the trend and on the momentum right now. That's why, again, I don't blame them for IPOing right now and even making their price a little higher than they know is reasonable. But if people are buying them, then that's all that really matters, okay? So looking at Snowflake, again, this is a cloud computing, cloud storage primarily company. It's a solid website. Again, you guys, I don't want to spend too much time on this, but I do want to recommend you guys do this for yourself. Take a look at them. If you're going to invest in them, especially for long term, if you're going to trade them, this isn't really necessary. But if you want to invest in them, as well as, once again, any company for the long haul, always look at their website. So that's Snowflake. Again, just cloud storage. JFrog is actually a development software. So I'm not going to act like I know I'm super savvy with what JFrog does by any means. We will quickly look over what they do in this Bloomberg article, but JFrog is it is cloud-based, but it's meant more as a developer platform. Okay, so JFrog, once again, capitalizing on this movement right now on the cloud storage developer. But this is a cool company. JFrog on the IPO is definitely, I would say, a little less crazy than Snowflake, which we will get into right now. So let's read this. Once again, shout out to Crystal Say of Bloomberg. IPO busy season erupts as Snowflake JFrog boosts listing plans. Cloud data company Snowflake could be valued at more than $30 billion. That is an insane valuation. Probably one of the priciest IPOs I've seen, and probably objectively in a long time. Rushed to market with less than 50 days until U.S. election. Software company Snowflake Inc. and JFrog Limited increased the size of their U.S. initial public offerings on Monday, setting the scene for several busy weeks ahead for new technology listings. Cloud data company Snowflake bumped its IPO price range to 100 to 110 a share from $75 to $85. So that is a very significant. That's almost a 25% price boost, just because, again, that this is in the span of a week. They're just capitalizing on the trend in tech, the greater trend in tech, which, once again, I don't blame them, but I think they might be, it seems a little greedy in my mind. Bringing the amount it's aiming to raise as much as $3.08 billion. Insane. The offering could value Snowflake, which was last privately valued at about $12.5 billion. So I don't know when that private valuation was, but when you're taking investments when you're taking private investments, so angels or venture capitalists, it's these guys' job to do a good job and properly value your company. So I don't think there's any way to rationalize a 3x since this private round was raised, but that's what they're pricing their IPO at, because they know people in this market mania are going to buy at their stock just because it's hot. They have Buffett's backing. We covered that in yesterday's video. I'm not going to cover that now. But Buffett, Salesforce, Berkshire Hathaway, and Salesforce are looking to buy large stakes in this right at the IPO. That's obviously brought a lot of hype to it. And that's, unfortunately, as I was saying in the beginning, the reality of this current market environment. It's not fundamentals don't mean nearly as much as they have in the past. It's all hype. It's all story stocks. Okay, so it was last privately held at about $12.5 billion and more than $30 billion based on the number of shares outstanding after the offering. So once again, you guys, just be very cautious if you're going to play this. Once again, okay, so to sum up my thoughts on what, just using historical references, all the IPOs I've played in the past, and once again, I'm not going to be playing this for myself just because the market is sketching me out too much right now. But I wouldn't be surprised at all, especially with all the hype around it. There's so much hype surrounding this IPO that I wouldn't be surprised at all to see it pop. Once again, the fact that they did just boost it from 100 or from 85, say 80 to 105. Is insane. So that's a significant price boost. This might dampen consumer sentiment a little bit, but there's so much hype around it, I don't think it will that much. All right, so I think we'll see a pop right off the bat, just to sum up my thoughts there, and let's move on to JFrog. So JFrog, which makes tools for software developers, raised its price target to $39 to $41 per share from $33 to $37. So not as significant as Snowflake, but still a decent little bump up in share price. An amended prospectus shows existing shareholders are selling 3.57 million shares in addition to the 8 million shares offered by the company. At the top end of the new range, the IPO could raise $474 million. So once again, JFrog definitely not at the scale of Snowflake. They are very different companies, so both cloud focused, both definitely falling in the tech sector, which we'll get in right after this, but definitely at a smaller scale, okay? So with less than 50 days to go until the U.S. presidential election, companies are rushing to complete their listings before investors hunker down to avoid potential volatility. A total of 15 companies, including blank check firms, are set to price IPOs in the U.S. exchange this week and could raise a combined $8.3 billion. So again, you guys, we're living in IPO mania. I did cover this in the Waves Weekly that I posted this past weekend. Just a frenzy of IPOs. And again, it makes sense from the perspectives of these businesses. They see a market mania. They see a market rally that doesn't line up with the economy. They know their financials aren't getting priced in. They understand the financial. So cloud computing, it makes sense that your financials are getting better. But there's so many companies, not only in the tech sector, but just overall, that are taking advantage of this market mania that we're seeing. They know there's so many new retail traders in here. These new retail traders are learning about IPOs. What IPO? If it IPOs, it must be worth, it must be worth buying, like if it's new, it's hot. It's the hot new thing. And everyone wants a piece of the hot new thing, especially in this hype driven market environment. Okay, so just be careful, you guys. Understand the players you're playing against, because that's really kind of what the deal is here. It's all game theory. It's all psychology. So because there is so much hype surrounding these IPOs, I do think that they'll pop initially, but I do think that they will see a significant pullback at some point within the next, or over the first couple weeks. May pop for a week, but I think week 2 or 3 it's probably going to pull back significantly. At that point, I might take apart. Okay, so once again, I do want to read a few of these quotes because I think I agree with them myself. Jim Cramer reveals playbook for Snowflake IPO. It's a great concept. That's nice. It's a great concept. For investors who can't buy the Snowflake IPO, CNBC's Jim Cramer recommended buying the stock after the next tech sell-off. When these cloud stocks sell off, they sell off hard, so I have to believe you'll get a better entry point as long as you're patient, the Mad Money host said. I bet it will have a very strong first week, yep, but the price of admission seems a little extreme to me unless you can get in on the deal. So once again, you guys, whoever invested in Snowflake, that's why venture capital and angel investing is, I'm kind of the end game for myself. That's where I plan on heading. I'll always play a part in take part in the retail markets and the stock markets and whatever markets I'm playing, just because I love that. I love the liquidity. But end game is angel investing, venture investing, just because the returns are so crazy, especially if a company goes public. Imagine what the people who invested in that private $12.5 million Snowflake round are making on this IPO. It's insane. So again, you guys, I think this is it. I think the price, they're pricing it once again for the third time already. They're taking advantage of some of the mania within the hype sector. They're capitalizing on that, which is understandable, but they understand. I think everyone who understands that this is overpriced, and just be cautious, you guys. I'm not telling you what to do. I'm not saying that you can invest. Maybe it'll just go straight up. Maybe it'll keep going up because this market is wild. But I'm personally extremely cautious around these, and I would personally wait because these are both cool companies. I do think that they do have prospects long term. Didn't cover too many of the fundamental prospects today just because I wanted to get across the point that you guys should be cautious about this. Maybe I will make individual videos about these two in the future depending on how they perform, but again, you guys, just on the IPO itself, please be cautious if you're thinking about playing these. All right, so let's get on to this. So this is the NASDAQ 100 tech sector. All right, and again, the reason this is important is just to kind of round out my point around why these companies are going public, specifically in the tech sector. It makes more sense to go public if you're a tech company right now, just because look at this freaking chart. So since the March lows, and again, you guys, I don't think the March lows don't hold too much weight because that was true fear. That was just a liquidity crisis. So since those March lows, though, to the high in the tech sector, it's up over 77% since those March lows, since that liquidity crisis we saw. So we're seeing an unprecedented rally. Let's be a little. How do I move this? Sorry about that. Let's be a little more reserved. Okay, Oh man, my God. Pick that up. All right, sorry about that, guys. Okay, so from the 2020 highs, before we saw that pullback, let's see what this is. Okay, so from the 2020 highs at the beginning of the year to right now, we're up about 17%. Okay, so tech, maybe cloud specifically, I would say does have the advantage over any other sector in the entire world right now, in the entire market environment. Okay, just because, again, everyone's at home, everyone's using more, everything is trending digital at such a more rapid pace. It was already trending digital. This pandemic just expedited the trends that were already in place and sped them up like 2 or 3 times, okay? So again, it makes sense that cloud is seeing a significant growth. And again, the financials surrounding cloud software is significantly better than it was at the beginning of the year. But the greater tech sector overall, there's still so many tech companies that are struggling and an economy that is extremely struggling. And you guys, just consider that we're still in kind of it's not the honeymoon phase, but I think you guys might understand what I mean by that. The honeymoon phase of this pandemic, of the economic hardship that we're going to face. I think it's just kind of starting. We're 6 months in or so. I still think there's a lot of rough waters ahead, and I don't think that this mania can last forever. I do think that, once again, the tech sector over the long haul will do well, but I do think there's some rough waters ahead, and that's a greater reason. I just want to say, be cautious around these IPOs. Okay, so we'll call it there, you guys. I will potentially make videos on these stocks individually, on these companies individually, more so in the future. But I really did just want to get the point across. If you're thinking about these IPOs, not just JFrog, Snowflake, but all of the other upcoming IPOs. Unity is a gaming software, a gaming developer that's going public this week too, I believe. That's a cool one, but all of these IPOs, you guys, just the entire tech sector, the entire general equity markets overall, please just be cautious right now. And if you have been tuning in, you would know that I've been preaching this for the past week or so now. But you guys, please just be careful. Once again, we are in a very mania-driven, hype-driven market, and that is sketchy. that's just sketchy. I'll leave it there, you guys. I appreciate you watching. Please let me know in the comments down below what you thought of this, what you think about Snowflake, JFrog, or Unity, if you're familiar with that one. There are, as we read in that Bloomberg article, a few other companies going public. We've got some blank checks in there. SPACs are hot right now, so let me know what you guys think about that. Please give me any opinions you have on any of the articles we touched on today, what your thoughts are, and what you're excited about this week as well, okay? Any exciting IPOs that you think I should cover in the future. Always love talking to you guys. Always love learning from you guys. So I'll see you downstairs, and until next time, you guys, always remember, take action, make waves. Peace.